Yo, what's going on, guys? It's your boy Conquer FX, and welcome back to the YouTube channel. Now, if you're new to the channel, can you please just leave a like on this video, subscribe to the channel, and click on the notification bell to get notified when I release new content. So, guys, on today's video, I'll be talking about institutional order flow versus the market trend. So, yeah, guys, let's get into it. So what is institutional order flow? I'm just going to quickly illustrate it right over here. When market is in a bullish trend, we, as you can see, we keep on breaking the previous highs to create new highs. So we break our previous high to create new higher highs. So basically that is what happens in a bullish market, or in a uptrend of a market. So guys, now what actually pushes the market to break the previous highs is what you call our levels of demand, which are right over here. Our levels of demand is what actually causes the break of structure to the upside, creating the new higher highs, allowing us to break our previous highs. So when I'm talking about institutional order flow is basically is basically defined by our major swing levels. So right over here, these are our major swing levels. Now, inside the major swing levels, what is going on is we have market trend, whether it is an uptrend or a downtrend. In between the major swing levels, we have price movement similar to this. So basically, all of this that you see right over here could be happening in this move to the upside, or this move to the upside. And same story for a bearish market. So yeah, guys, the banks, they they are in control of the market. So when the banks get involved in the market, that's when you actually start to see the big moves, you know, the moves that actually break structure to the upside or to the downside, depending on whatever trend we are in. So now the problem is that people, they understand market trend, and they know how to trade the trend, and they know how to get involved. Most people, they would let me quickly make an example. The market would be in a downtrend, right? Downtrend just like this. So somebody in a downtrend, they would keep on looking to sell the market, breaking our previous lows. So people will basically be taking entries right over here, right over here at these levels, expecting that price will break the previous lows. And that is how we trade a bearish market. So now what happens if you are involved in a downtrend, but you do not understand institutional order flow? So you'd find yourself selling in that bearish market, only to realize that we are in this level right over here. And as a smart money trader, we'd understand that once we are in this level over here, we are in a level of supply which could possibly break structure to the upside, breaking our previous highs. So all of this could be a bit too much or confusing, but let us just get into the charts and show you what it is that I'm actually talking about when I'm saying institutional order flow versus market trend. So let me just quickly remove this. So yeah, guys, as you can see, this is a pound dollar pair, and right now we are heavily bearish. As you can see, price keeps on breaking our previous lows to create lower lows. So basically that is what's happening on the daily time frame of the pound dollar pair. So as you can see, we keep on breaking to the downside. So these are the levels of supply that I'm talking about that push order flow to be bearish. So the banks keep on executing their entries right over here, pushing price to go even lower and lower and lower. So yeah, before we continue, let's just talk about change of character and break of structure before we continue, because it's needed in this video. So guys, when I'm talking about a break of structure, it's simply me talking about this price breaking the previous high to create a new high. So we break our previous highs to create a new higher high. So this is what I call a break of structure. Now, break of structure is a symbol, or it is a sign for us as traders to know that once we have a break of structure to the upside, it means price is going to continue being bullish. So even if price breaks structure right over here, it retraces deeper into this up leg right over here. So this is what we call a correction or a consolidation. Our consolidation pulls back quite deep, and still price gets to a level of demand, and at the level of demand price will start to shoot up, breaking the previous highs. So yeah guys, that is what we call a break of structure. Now let me get into a change of character. Change of character is very important for us to know, simply because it tells us when price is shifting from a bearish market to a bullish market, or vice versa. So let's say we are in an uptrend right over here. We are in an uptrend, and now price breaks structure, but it pulls back deeper, breaking below our previous lower high, and then it comes back to the level of supply that gave the break of structure, and now price starts to shift from a bullish market to a bearish market. So right over here we've got a break of structure to the upside, as you can see, and I did say that a break of structure symbolizes that we are the price is still bullish, meaning price is still going up. But once this happens, once price breaks below our lower high, that is what we call a change of character. Change of character simply notifies us that price is changing from a bullish market to a bearish market, and we'll be looking at levels of supply right over here. That is where we'll be taking our entries. So it's basically gonna look something like this. This is where we're getting involved right over here. So basically it would look something like this. So yeah guys, with that being said, let us start the video of how I want you guys to actually approach the market when it comes to the understanding of institutional order flow versus market trend. So as you can see, let me just quickly mark out our most recent major swing levels right over here. So yeah, so now guys, as you can see, the major swing levels are marked out in pink, but in between these levels we can tell that we are in a bearish market, meaning price is going down as we are creating lower lows, lower highs, um, lower lows, and lower highs, and this is our most recent lower low. So yeah, and now what we want to do guys is that, okay, let us just let the video go on, and I'll keep on explaining further. So as we can see right over here, price broke structure, meaning it shows us that price will still be very will still be bearish. So let us see what goes on. So right over here, guys, as you can see, we had our breakup structure over here, which was a breakup structure to the downside, and we just quickly mark that out. Now we have broken above our previous lower high. Now this is what we call our change of character, meaning there's a high chance of price shifting from a bearish market to a bullish market. So once this immediately happens, like I showed you on that small sketch, that is when we start looking for our levels of demand or our order blocks. So we just drop into smaller time frames, such as the 1 hour, and would look for our levels of supply, no, our levels of demand and our order blocks. So right over here, we'd be looking for this order block right over here. Now, why do I say this order block? It is simply because the levels of demand right over here, the positions have already been taken out simply because there was a lot of ranging happening in this zone. So I'd be looking to get involved in this order block right over here. So we just quickly mark it out as our point of interest, and we see what the market has in store for us. So as you can see, price is playing out. Now in the previous video, I did explain how we take entries on a POI. I did say you just want to take your Fibonacci tool and mark out the 50% level of that zone of your POI, and once price taps into the 50%, that is when we would have our entry and our stop loss just slightly below that level. As you guys can see, the stop loss is just 16 pips, which is a very small stop loss whether you're trading a big account or a small account. So yeah, I just wanted to quickly add on to that. So let us just see what price does. So now guys, another thing I would want to show you is that whenever we have a push to the upside, or let me just make an example with this leg to the downside. So as you can see, this was our lower high, this is our lower low right over here. So guys, when price is bearish, we are looking to break these lows right over here. So now as a trader, you want to get involved in the top half of the 50% of all our Fibonacci. So basically you want to get involved in these areas. Now why do I say you want to get involved in these areas? It is simply because when you get involved in the lower half of the Fibonacci, most of the time you get caught out on the wrong side, whereby maybe, let me just quickly just take this back to explain it properly. Maybe you're looking at this level right over here, this level of supply, thinking that price would react and break these lows. So what you don't understand is that price is now retracing, and as it is retracing on the 15-minute or the 5-minute time frame, basically price is doing this. Price is having a bullish movement to the upside, which is causing the retracement. So most of the time when price keeps on retracing to the upside, people want to take trades right over here, not realizing that these levels right over here, they are not strong, so they will not hold the market. Hence a lot of people get caught on the wrong side of the market. What you want to do is you want to look at levels which are above the 50%, because those are the levels whereby price is more likely to react to. That is where you have your order blocks which have not been tested, and you have your levels of supplies which have not been tested. So yeah, I wanted to further elaborate on that. So let us just continue. So we did have a break of structure to the upside, and we did mark out our POI. So let us see how price moves. Let me just do this. So yeah, we've broken above our previous lower high, and I did explain how we would be looking to enter at our point of interest. So let us see what goes on. So guys, as you can see, if we drag this, we would be triggered into the trade right over here, and would be targeting our previous highs. So let's let price continue. So guys, I want you to notice something. As we get triggered into this trade, we hardly had any drawdown, so our trade was hardly in losses. As you can see now, the trade has taken or has hit its take profit. That's the beauty about trading smart money concepts. If a trade is invalid, you can quickly see, and it is low risk. So right over here, price did hit our take profit, and now we did have a break of structure to the upside. You just want to mark out that break of structure. This is our BOS, and you want to look at the demand zone that actually caused the break of structure. Now, depending on how you take your entries as a trader, whether you wait for the 50% or immediately when price taps in, you'd be involved in this trade. So this would be our second trade, looking at something like this, which is also quite a small stop loss, which is like 18 pips, and we are targeting our next highs. So let us see how this goes. And initially, okay, price does okay. Looking at our 50%, I would have been triggered into this trade because that is what I wait for. So I would be involved in this trade right over here. And let's see, boom, our TP has been hit on the second trade. And again, you have a break of structure to the upside right over here. There's our break of structure, and you want to look at levels of demand or any order blocks. So I'd mark out this OB right here as our POI, waiting for market to come tap in here and continue being bullish. Now this is you using the market trend to capitalize on big moves. This was a 152 pip trade, and this is a 92 pip trade. So these are actually big moves, whether you're trading on a small account or a big account. These are big moves which have a risk reward ratio of 1 to 8. This I would say 1 to 5, because your risk is actually much smaller, and trading this way, it allows you to actually increase your lot size while you're not increasing your risk. So which means it is much better for you as a trader. So now we have recently broken above the previous high, and let us see what the market does. So guys, all the movement that is going on in these pullbacks, you don't need to get involved in these movements simply because you know what you're waiting for, and when you see what you're waiting for, that is when you actually get involved in the market, allowing you to avoid unnecessary trades. So price is slowly coming to our point of interest, and right over here we got taken out in this trade, and basically price did react to this level of demand right over here. Now if we were to get triggered in this trade, we had a from the 50 we had a stop loss which was less than 10 pips basically, and we were targeting these highs. Now price breaks through our POI and goes to the next level of demand. Now gets there, taps into the 50, and you are triggered again. So basically this is to show you how smart money concepts make trading much easier than trading using any type of retail concept, whether it's trend lines or whatever. So second entry, it is a 10 pip stop loss, and your TP is 120 pips. Now, knowing how market moves in an uptrend using levels of supply, demand, this is a trade with a high probability setup. So let's just continue and see what happens. So guys, again, I want to point out something. Once you get triggered in a trade, your trade is hardly in losses. Right over here, we are hardly in losses. Right over here, immediately price action showed us that this point of interest is invalid, and we took our loss, which was a very small loss, and we go on to our next level of demand. And looking at our level of demand, we got triggered in same setup. We hardly went into losses in this trade, and it was just a beautiful trade. Let's see what goes on. So I'm not sure what psychology you have, but most people like to secure after prices moved a certain amount of pips. So as you can see right over here, our TP was missed by a small margin, and most people could have closed because this was next to their TP. But price again does come back and then just shoots up towards our take profit. So let's just go to the 1 hour chart. And yeah, guys, you had a 120 pip take profit and it was smashed. Now you are involved in all these trades to the upside. Now this is what you call trading the trend. Now this is where institutional order flow comes in. You have to be aware that order flow in this pair overall it is bullish. It is heavily bullish. So this, you'd have to understand that this was just a minor pullback, meaning if we are in a downtrend, this whole zone right over here is basically what is happening over here. It is that pullback. So as much as you are able to capitalize on the buys, it is important for you to be aware that price or institutional order flow is bearish. So how do you approach this? Like I said, you take your Fibonacci retracement, you mark out the two legs, your previous lower high and your lower low. So once you are above the 50%, that's when we start looking for our levels of supply, which could possibly give us the break of structure to the downside, taking out our previous lows. So once we are above the 50%, we start looking for order blocks and levels of supply. So as you can see, I've marked out the zone whereby we'll be looking for our levels of supply. So let me just quickly remove this. So right over here, I can see a level of supply right over here. This is the first one, and over here you could say it's a level of supply, but the main reason why I wouldn't use it is that supply was created and immediately it got taken out. As you can see, price shortly after the drop, price did pull back to come collect those orders. Basically, the banks have already collected these orders. So the level of supply which you want to look at is the level of supply which hasn't been retested yet, meaning orders which are here haven't been taken out, meaning retail traders are involved in these sales right over here, and the banks want to push the market up so that they wipe out all these traders that are in these cells right to the downside, and they would enter at the level of supply, pushing the market to the downside. So why do I say, or why do I want to look at this level of supply? Firstly, I said it hasn't been retested, meaning the orders haven't been retaken. And number two, we have what you call imbalance. So there's imbalance in the market, and the imbalance, it is shortly under that level of supply. Now I will release a video explaining how to use imbalance with smart money concepts. So the imbalance gives us confidence that this is the level of supply that we want to look at. So now that we have marked out our level of supply that we want to look at, we just mark it out. This is our point of interest, and now as we keep on taking the bias towards our point of interest, we are aware that once we get to our POI, that is when we start to look at shift in market trend, shift in market trend, so that you don't get to these levels over here and you are still looking for buys. Once you get to these levels over here, institutional order flow allows you to understand the fact that once we get to these levels over here, we start looking at price shifting trend, shifting from a bullish trend now going into a bearish trend. So let us just go back to our smaller time frame. Just go to the 1 hour. So yeah, guys, again we had our breaker structure to the upside, and we're gonna mark it out. Now let's just go to our 30-minute to look at the level of. So right over here, what I mean by price have already been taken out, you can see this is the last bearish candlestick before price actually moves to the upside. But if you look at it properly, let me just do this. If you look at it properly, if you were to mark out this level right over here, price has already collected these orders right over here, meaning chances of price coming back to this level of demand is very low. But it doesn't mean it is entirely impossible. I'm just saying it is very low. And if you look, this is our last bearish. Price did wipe out all the entries which are here. So now this is a level of demand which is less likely to hold, but since there are no other bearish candlesticks, we'll just mark it out just in case price does pull back to that level. But already we know that chances of price coming back to these levels is very slim. And now this is what smart money concepts gives you guys. It gives you all those small pieces of the puzzle to make that one big picture. So all these small understanding that right over there there was what's this there was imbalance. It helps you understand as to why you'd actually be more confident with this level of supply. So it's all these small information about smart money concept that actually help you with your trading. So yeah, guys, let us continue and see what price actually does. So we've marked out our POI, and let us see what happens. So prices were chasing a bit, and see what goes on. So we have a break of structure. Wait. Let me pause it right over there. We have a break of structure right over here. This is a break of structure, and price did come down to this level. Now, were we able to enter? I don't know. Those of you who enter immediately at the touch of the level, you guys would have been triggered in, but since I wait for the 50%, I'm not triggered in and I'm not phased by this. I just allow the market to just continue moving up. It's okay. Now let us see what price is doing. So guys, look at that. We are in our POI. So once we have entered our POI, I immediately stop looking for any buys because institutional order flow tells me that the order flow of this market is heavily bearish. So I'm in a level of supply right now, and I'm looking for change in market direction. What does this mean? This means we go down to our smaller time frame. Now guys, as I explained to you, change of character, what we want to see is we want to see something like this happening. Something like this happening. And now we know that we want to take our trades right over here. Why? Because the level of supply right over here is the level that gave us the change of character. The change of character which happened after price had shortly broken structure to the upside. Now this simply symbolizes that we are changing trend from a bullish market to a bearish market. This is what we want to see at this level, at this point of interest level. So let us just continue. So as you can see, price keeps on creating on the smaller time frame, price keeps on creating higher highs. So this is our most recent level of this is our most recent break of structure. So we just mark that out, break of structure, and I'd say this is the the level of demand that gave us that break of structure. And but now this level, we are not looking at it to take buys, we are looking at it wanting to see price break below it. And once price breaks below it, it is a symbol of change in character and want price to continue moving to the downside. So we just mark it out so that we know what we are looking for. Now let us see what price is doing. So yeah guys, clearly price does, let me just also remove this POI. We know that there's a POI. I just want to remove it so that we are looking at a much more clear chart. So guys, as you can see, we have broken below our demand level, which has given us the break of structure to the upside. So we just mark it out as a change of character, and let us just see what price is doing. Okay, so now clearly price has given us the change of character, and what we do now is mark out that level of supply that gave us the change of character. We want to mark it out, and price is just moving, and again 50% of this level is where you want to get involved, and just mark it out simply like that. And that is where we'd be looking forward to take our trades. So let us see what price does. And boom, we are triggered into our trade right over here. Now on the 1 hour, 1 hour or the 4 hour time frame, you have to realize that this trade that we are taking right over here, it is due to this level of supply. Now this trade, it is a trade that we want to take, and it is a trade which should give us the move to the downside, eventually breaking our previous lows. So taking this trade, we are looking for price to reach all the way down here. Now that is what our rules tell us, but we react to the market. We don't tell the market what to do. So the market has reacted to a level of supply. So as it is reacting to a level of supply, we are also reacting with it. You know, we are reacting with the market to see where our trade will actually take us. Let me just do this. So basically, we are looking for price to go all the way to the downside. Now let's see how price actually moves. Now I'm not gonna fill out this whole thing because the screen turns blue and the candlesticks are not visible properly, so I'm just gonna leave it right over here. So guys, we are triggered in and price is moving to the downside, as you can see. And in the description below, I will leave a link to my Telegram channel. So basically in the Telegram channel, I will be giving daily setups and free signals to everybody who feels like they need it. So I want you guys to go check out the Telegram channel. And right now, the only thing that you're gonna find there is basically the weekly results from the 1st of August to the 5th of August. So those are all the trades that we took, just to show you how we actually operate at Conquer FX. So yeah guys, let me just pause a bit. So as you can see, price did react beautifully at this level of supply, and it is starting to drop. Now as it is dropping, we have multiple breaks of structure. So this is the most recent break of structure to the downside. Now you see what happened. We had a change of character. Now we keep on having break of structures to the downside. Now this strongly confirms that now we are in a bearish market. We have shifted from an uptrend. Now we are in a downtrend. And look at this guys. Already in the downtrend, we were involved so early. And now we are gonna just keep on adding our positions as price keeps on going down. So right over here, we have a level of supply, but we weren't triggered in, so we'll just leave it and we'll just continue to mark it out, just in case price does pull back to that level. And we have a break of structure, and right over here we have another level of supply. And let us just see if price reacts to this level or not. So price keeps on moving. Let's see what is happening. And we have our next break of structure to the downside. Now as we have our break of structure to the downside, right over here we do have a level of supply which gave us the break of structure to the downside. Now guys, why would I not look at this level? It is simply because price right over here has generated liquidity. Price has generated liquidity. So what do I mean by liquidity? Liquidity is when retail traders enter a market early, and their stop losses are exactly where the banks are going to execute their orders. So right over here you can see we have a level of supply, and price pushes the market close to that level, and then it pushes it down. So they know that people trade with their emotions, so they are afraid to miss the big move to the downside. So they put it back up a bit. People execute their trades, retail traders, and then they their stop losses are just right over here, and they are targeting to go low with us. Whether they are targeting these previous lows, but we want to get involved in the big moves. So this is a 62 pip move. It is big, but we could do better. So basically they get triggered in these trades. So if they have their take profits right over here, good for them. If they are looking to go lower like us, that is bad for them, because look at what price does to liquidity. This is liquidity, and liquidity, basically a lot of people enter right over here, and there's just free money hanging there, and the banks will just go up, wipe out all those entries, and they take their orders at the level of supply and just continue to move in the direction which everybody was looking at. So that is liquidity. So hence why we wouldn't look at this level of supply right over here. So I want you to look at how price reacts to this level of supply. See what price does there? It gets to the level of supply, it starts dropping, convincing people that we are selling. So people start doing what? People start selling. They get caught on the wrong side of the market. People get triggered right in. Others entered here. Others entered right over here. And what people don't realize is that now they are the liquidity. So the people that entered right over here will continue and enter right over here, because they lack the understanding that right over here we have liquidity. Now it's not easy identifying liquidity in the beginning, but as you keep on working on your skill, it becomes more and more easy to start identifying liquidity. So boom, people get stopped out, and look at that. Look at that. People get stopped out. Price takes out everybody, even the ones that entered right over here. And now look, their orders were executed at the entry of this level of supply right over here. So right over here, stop losses were taken out, and then boom, price just dropped to the downside. It just dropped. Now this is the entry which we took. If you go and go check out the Telegram group, the Telegram channel, we were involved right over here, and our stop loss was less than 15 pips, as you can see, and we were targeting these lows. Now these are the trades that I take to build my account, but the initial trade which I took over here, I am still holding. So, and price keeps on dropping, and as you can see we have another break of structure to the downside, and right over here we really don't have any levels of supply to look at. So I did not take any trades, or I wasn't really looking at anything. So, and this was all happening on Friday, so I had the luxury of stepping away from the market. It was NFP. I did not trade the NFP, simply because I'm not good trading fundamentals, so I just step away from what I cannot trade. But I realized that I could have gotten involved in a trade, but it is what it is. Sometimes we lose trades and sometimes we catch trades. It's the way this game is, this forex game. It's not a game, but yeah, you get what I'm saying. So yeah, let me just quickly fast forward this. So basically, this is what has happened. This was the NFP move. So now we had a break of structure to the downside right over here and BOS. And now guys, we have our level of supply right over here, and look at all of this imbalance in the market which was created by the NFP. So now this is our point of interest. This is our point of interest, and for the upcoming week, this is what you can look at. This is what you can look at for this upcoming week. Price retracing all the way to the top, so that you'll be able to take these cells to the downside to break this level of structure. So thank you guys for watching this video. I really appreciate it. Drop a like on the video. If you have any questions, anything to say, just put it down in the comment section, and I will leave the link to my Telegram channel in the description so you can go check that out. So thank you guys for watching, and peace out.